All right, in this first section of personal finance, we want to talk about some basic issues around banking and budgeting and saving. But initially, I just want to talk about some very basic ideas, getting paid and banking, putting that money in the bank. Okay, let's look at a basic pay stub. We've got this guy, John Doe. He's got a new job. It's his first job. He's a dishwasher at a place called ABC Mart. And he makes $7 an hour. Let me see if I can get my pen here. Makes $7 an hour, and he works 24 hours. And so his gross pay for that is $168, but he's got some deductions. Obviously, he's got his federal income tax, $25. He can file his taxes and perhaps get some of that or all of that back. However, he pays $10 in Social Security FICA and $244 in Medicare tax FICA. The FICA taxes are payroll taxes. They are non-refundable. They're used to pay pensions and health care for the old folks. And so he gets charged $43 in deductions and only takes home about $124. Okay, when John showed up on the first day, they handed him a W-4 form. Every job you go to, you'll get this the first day. And it looks kind of daunting, but it's pretty simple. This section here is what you want to look at. The stuff down here is pretty obvious, just name and address. But up here, it's personal allowances. They want to know how much to withhold. And so the safest thing to do is to enter a 1 for yourself, and then your total allowances or exemptions will be 1. Now, you could put in other stuff. If you had a spouse, you could put 1 in for the spouse. You could put in 1 for each of your children, and that would withhold less. And you'll pay less tax because of that. I used to work with capital markets professionals, and they would put in, most of their money would come in the form of bonus at the end of the year, so they would put in like 16 allowances and make it all work out at the end. But that's dangerous and possibly illegal. Be conservative. Put 1. At the end of the year, you'll get a W-2, which is a wage and tax statement, and for it'll show you how much you made. And then this Social Security wages and Medicare wages will probably be the same amount. They're somewhat calculated a little bit differently, but for a first-time job, they're about the same. And over here we see how much federal income tax was withheld and how much Social Security and Medicare tax were withheld. You can't get that back, remember. But you can, when you file your taxes, you'll include this W-2 statement. You may be able to get some of this, some or all of this money back in a tax refund. Now, Joe learned, here he is, washing dishes, when he got his job, that ABC Mart does not issue checks. They only will do direct deposit to a bank account. It's much cheaper for the company. They're part of a giant corporation somewhere, and it's just better for them. And so he wasn't sure he wanted a bank account. He didn't have one. He'd rather get a check or cash. But he filled out the forms they gave him for direct deposit, and he went to the bank and opened a bank account. And that was a very smart thing to do. Before you can begin growing your financial condition, before you can begin establishing credit, you need a relationship with a bank, and it needs to be managed very carefully. In fact, that's the first step in building credit and in building your financial empire. Now, different than Joe, we have Susie here, who got a job, her first job at 64 Flavors and Counting, and she got her first check. It was $100 approximately, and she didn't have a bank account, didn't feel like she needed a bank account, and so she went to a check cashing store, and they cashed her check for her, but they charged a $7 fee. In case the check is bad, they need to get compensated. So she paid 7% of her pay just to get the check cashed, and people do this all the time. It is a very, it's sort of the ghetto zone of banking, and you don't want to be there. You want to have a bank account so you can avoid that. These check cashing stores tend to proliferate in low-income areas, which tells you something about the kind of people that are forced to use them. There are approximately 10 within a mile of my house. Let's take a little quiz about banking. Question 1, people are able to make deposits to and withdrawals from both savings accounts and checking accounts. True or false? Well, of course, that's true. Check cashing services charge minimal fees for cashing checks. True or false? False. Payday loan stores, check cashing services charge exorbitant fees. $7, in Susie's case, might not sound like a lot, but that was 7% of her check. It's enormous. Usually people are able to cash checks for a fee or a much reduced fee at a bank where they have a savings or checking account. True or false? That is true. In fact, you can usually deposit the money in your account and get at least $100 of that amount, or all of it, it's less than that, in cash and walk away with it immediately. One of the advantages of having a good relationship with a bank. Next question, there are fees or costs associated with checking accounts. True or false? That is true. Most people think that's false, but they used to have a monthly fee. They got very competitive. However, some of the things that banks have done to get money from customers have been curtailed by legislation since the Great Recession. I predict that they'll probably try to come back with more fees and costs associated with checking accounts, so you'll need to be vigilant. It's still a much better way to live than living through check cashing stores and payday loan stores. Savings accounts pay interest on the balance in the account. True or false? Well, of course they do. Unfortunately, because interest rates are very low right now, it's not very much, but they do. It isn't legal for companies to require employees to use direct deposit, in order to force them to get a bank. True or false? False. It is perfectly legal for an employer to require you to get paid through direct deposit, and if you don't have a banking account, you cannot work there. Now, that's an important point. There is not a Fortune 500 company, I suspect, that does not now require you to pay direct deposit. So if you do not have a bank account, you are greatly decreasing your employment chances. So you begin to see the importance of having a bank account and managing it appropriately. With a checking account, you can write checks to pay for many types of goods and services. True or false? Well, of course that's true. There are no fees associated with savings accounts. True or false? False. Even though the bank is getting the use of your money and paying you very little interest, there can be fees associated with that. You need to be vigilant when managing your bank account. Even though banks generally treat people much better than do, say, check cashing stores, you have to be an informed consumer. Now, I don't want to insult your intelligence, but since people just don't tend to write checks much anymore, here's how you write a check. First of all, you got to put the date here, obviously. There's this antiquated idea that you can write a check to somebody. If you don't have the money in your account, you can put a date for later in the future when you know you'll have the account. It's called a post-dated check. That doesn't work. The bank is going to immediately debit this money, and if you don't have the money, you're going to have an overdraft. More about that in a minute. Section B is to whom the check is written. If you're writing a check to me, you would put Dale Wendell right there. Section C, of course, is the amount. And Section D is the amount written out, as in $122/00. Now, Section D is the legal amount of the check. If D and C do not match, D is what legally the check was written for. But I can tell you that the proof operators who encode these checks to process them, they're looking at C because they're moving very quickly. But they need to match. You need to make sure of that. E is a memo for notes. Usually it's left blank, but if you're mailing in a mortgage payment, for example, you might want to put the account number here in case your check gets separated from the payment. They can easily know who paid and credit your account appropriately. And finally, you sign here, and a check truly is not valid unless it is signed. Now, a checking account will come with an account register, something like this, where you're supposed to record all of your deposits, all of your debits, both here we see an ATM withdrawal, here we see a debit. He used his debit card at Hamburger Haven. Here he wrote a check. And you probably aren't going to do this. Joe and my elderly friend Mike are probably the last people in America that use this. But you do need some system. You cannot rely on, what the slip from the ATM slip says you have in your account, because they're deposits not credited. There are debits that are not debited. And so you have to maintain some kind of system. I keep a little spreadsheet where I kind of balance my account every couple of days by looking at the debit card receipts in my wallet and looking at my account online. But you got to have some kind of system. You'll get your bank statement, and it'll show all the activity. And again, if you were a very old school person, you would use this space down here to reconcile your own check register, the previous slide, to the bank checking account. Mike and I used to be the last people in the world that did that. I've quit, and Mike still does. But you should save your bank statement. I would save 2 years worth. It can help you out in a lot of issues. Finally, you want to keep track of your account, because you want to avoid an overdraft where you write a check or a draft hits your account. Maybe you have a draft that hits automatically every month, like Netflix or Planet Fitness. You want to be careful that your account doesn't go negative, because when that happens, the bank, the first time it happens, the bank may or may not pay that check or debit, but regardless, they're going to hit you with a very high fee. They've been as high as $30 or $40 per debit in recent years. However, there's been some recent legislation, as I mentioned, that is sort of curtailing those fees, but they're still very high. And worse, if you do this a lot, the bank is perfectly legal. It's perfectly appropriate to close your account and say, hey, you know what? We don't think you're managing your account well. We're going to close your account. And you think, so what? I'm going to go down the street and leave Wachovia and go to Regions and open a new account. But guess what? Wachovia puts your name in a special database, and when you go into any bank or credit union, they're going to look you up and say, oh yeah, I'm afraid you can't open an account here. And this could lead you to being unbanked, meaning you cannot have a bank account, which would mean you have to live in the banking ghetto world and use check cashing stores and charge exorbitant fees. You probably can't work at Fortune 500 companies and so on. So don't let that happen to you. On the other hand, by properly maintaining a bank account, you've accomplished step one of building your credit and your financial situation.